Hello and welcome to yet another Gold Rush Daily. Today being on the 9th of September, 9th of October 2025. My name is Timothy Carey, your research and market analyst. And let's begin by looking at the fundamentals. So fundamentally today for the dollar, we are not looking at much data here. What we are looking at is basically some speeches from the Fed officials. I think yesterday we were able to see the Fed meeting minutes, and I believe as a trader you are able to take some time and read through the minutes, to digest the minutes, to read the tone of the minutes, because it's very important since it's going to shape how the markets are gonna react. And before even we look at maybe probably the Fed meeting policy, that is the previous meetings, it's important to realize that mostly today we are looking at FOMC members speaking. Already we have Ba, who has already spoken today at 12:45 a.m. We are looking forward towards Jerome Powell will be speaking today at 3:30, and also we'll be having Bowman will be speaking as well as 3:35. And also we'll be have Ba again speaking at 7:45 p.m. and also at 10:45 p.m. today. So what we are seeing is mostly some speeches from these Fed officials, and that means basically when you see the speeches, what it means is that we might be able to anticipate quite some high volatility here, right? So that's what basically means when we have these Fed officials. What it means is that what you're looking at, not really much volatility, but basically trying to give us the tone of the market. And we have always talked about either being dovish or being hawkish, and therefore it is important to take some time and listen to these kind of speeches, right? So that's quite significant. So let's look maybe probably to the yesterday's. This is the summary of the Fed minutes. I believe you also took some time to read through it. This is the minutes of the Federal Open Market Committee that took place in September 16th and 17th, 2025. And it's just a joint meeting of the Federal Open Market Committee and the Board of Governors of the Federal Reserve's system, all right? So basically, these are the minutes of the previous meeting that was held on September 16th. So it's important to go through these kind of minutes because it gives you the sentiments of how the markets are likely to behave. So we are seeing that the vast of majority survey responded expected at least 2 basis point cut by end of year. All right. So this is according to majority. So the reason why right now we are riding on probabilities of having at least 2 rate cuts in the next by the end of this year, that is by the end of 2025. So we are looking at maybe probably 2 cuts, each 25 basis points, and that's actually what we'll be looking forward to, and that's what the markets are pricing themselves at the moment. So even though there was division, if you look at here in terms of voting, which is very crucial, so I believe you'll take just some time and read through this so that you can be able to understand. And you can see for the voting of this action, basically for them to cut the rate by 25 basis points last year, the voting was most of the governors voted for this, including Jerome Powell, John C. Williams, Michael Barr, Michelle, Susan, all those ones, except Stephen Miran, who actually pulled out of the meeting when the meeting was going on, right? So, and they agreed that the next meeting will take place on Tuesday to Wednesday, that is October 28th to 29th, 2025. that is this month. All right, so we are looking forward to that Fed meeting this month on October 28th to 29. So we see now the digestion of that. You can be able to see here. This is more article from CNBC. All right, they usually give very important articles that gives us the clues in terms of trying to digest the markets. So you see that the Fed official in September was strongly inclined to lower interest rates, with the only dispute seeming to be over how many cuts were coming. So, and this was revealed from the previous meeting. So if you take time to read this particular meeting, so the dot plot of individual members' expectations showed that the group split 10-9, with the slim majority expecting two more rate cuts before the end of the year. All right, so we are seeing that officials grew concerned with the state of the labor market, which they saw as weakening as upside threats to inflation continued, though they still expected it to ease back to the Fed's 2% target. All right, so even though there was that division, but the minutes shows at least you're expecting at least two rate cuts by the end of 2025. But what will really make sense, or what will really guarantee this, is how inflation is going to be. Okay, so if in case we are going to see heightened or sticky inflation, then it means we might not be able to see those two rate cuts. But in case you are going to see reduced inflation, then what it means is that we might be able to see the two rate cuts that we are probably talking about. I think if you look at the data, all right, if you look at the data for that is if you look at next week, right? Next week is when we anticipate to have the FOMC, the CPI data here. So that is it's scheduled for next week on Wednesday, October 15th, 2025. Okay, so we will be looking forward in terms of what is really on the table. Also on Thursday, we'll be having the core PPI, all right, and the PPI data as well. So it is very significant to monitor those numbers. And now that we don't have NFP because of the government shutdown, it's a bit concerning, because it's also raising some alarms in terms of how the markets are going to respond. Because as investors, it's always good, or as traders, they always rely on these economic releases in terms of trying to look at how these data are going to affect or shape the markets. All right, so let's look at the technicals, and we begin looking at the dollar index. And what you are seeing with the dollar index here, we see the dollar index tapping the 99 level, and we see some retracements. All right, we see some retracements of the dollar index after it tapped the 99 level. So there was no precise break above this particular zone. All right, so but what you're seeing is some push on the downside. So this push on the downside, what it really means is that we might be able to see the price push down again, maybe probably to this level, because what we have there is already a very precise break of structure. And that means the market can pull back to this particular zone, because that's now where we have the structure, right? That's where we have a structure there. So that is the order block. Okay, so maybe in case we're gonna have a pullback, I'm looking at a pullback to around this level. And maybe probably we might see the price continue pushing up. But in case we see the price break below this level, then what we'll be looking forward to is the continuation of the bearish sentiment. But this again will depend so heavily in terms of how the government shutdown is going to how the prolonged of the government shutdown. Right now, we are on the 9th of the shutdown, and concerns are rising. Tension is rising in terms of how far will this shutdown prolong. And the reason why people now are looking at dollar being a safe haven. So the reason why you are seeing a bullion run for the dollar index. All right. So this, I'm looking at it probably a pullback to this level, and then we continue pushing higher. all probably the price can even break above this level from where it is, break above, retrace slightly, break above this level. And we talked about, in case the price breaks above this level, then we will be looking at the prices coming to test the 100 level. So that is the dollar index. And let's now look at gold. So when you look at gold, we have seen gold retracing. We have seen a gold hitting the all-time high, and then we saw retracement coming back again to retest the 4,000 levels. As you can see that clearly. So yesterday the price reached 4059.35, and then it retracted to come to the to retest the 4,000 levels, and from there we see a bounce back again. If you look at it from the 4-hour time frame, it's quite a bit precise. So this is the 4,000 levels here. The price came retraced to retest that. Of course, that is like I mentioned yesterday's in the yesterday's video. Anytime you see gold break all-time highs, it comes back to retest. Most of the times, it comes back to retest the previous all-time, the previous highs, because these previous highs now they act as support. So the price has to come at some point. It has to come and retest those particular levels, right? So that is what we are seeing here, and now the price is gaining some momentum to push higher. We are talking about 3059, all right? We are talking about 3059.35. That's where we have the all-time high. I mean 40. Let me mark that 4059.35. So that's where we have the all-time high, and that's where we will be looking at the price coming to. It's not really far away from that level, and then we start now aiming whole numbers. This is almost 4060. So from there, we'll be talking about 4065, 4070, 4075, and 4080. So if you look at it from the 1-hour time frame, what we are looking at is the price breaking above this particular level and creating all-time highs. But we might be able to see some maybe probably some rejections at this particular point, or some reactions from this particular level, because here the price having created a BOS and therefore coming back to this level. This is a key level to watch, because we might be able to see the price maybe probably continue pushing on the downside. Right, we might be able to see the price maybe probably retrace again to retest for the second time the 4,000 levels. But what I'll be looking at is a break above this level. If we see the price break above this level, then what I'll be looking at is a retracement, which will give me even some more buying opportunities. But it is, I may say, it is suicidal in quotes, selling at this particular point right now, because what we are seeing for the prices of gold is we are very bullish for the prices of gold. So selling at this particular point sometimes might not really be a good opportunity, or a good position. But again, you might do that with proper risk management, but again, that will be a very high risk trade. So what I instead I can do is, or what how I react is, I'll watch this level. Once we see the price break this level, then I'll be looking for a retracement, and I locate my order block, and then now I look for buying opportunities. Alternatively, once the price comes back again to these levels here, because as you can see here, we still have these engulfing that has not been tested. So we might be able to see the price push back again to the almost the close to the 4,000 levels, almost tapping these particular order block. So these, I mean, these engulfing. So the engulfing is between 3994.58 and 3984.20. Okay, so in case we see the price maybe drop to these particular levels, we will be looking for some buying opportunities. Okay, so for these other level here, the order block in the 1-hour time frame, we have it between 40 45.11 and 40 59.35 levels. All right, okay, so that's what I will be looking forward to. So right now, what I can say is, if you are looking at gold opportunities, basically you have to really look for those A plus setup, because price is having being oversold, we might have that fears, because right now everyone is greedy, and there is this quote that if everyone is greedy, right, if everyone is greedy, then position yourself the opposite. Okay, so if everyone is greedy, be fearful, and if everyone is fearful, then be greedy. Okay, so that's a famous quote in the financial markets, and that's what really happening right now with gold. Everyone is there is that part of greedy that is coming in, and also a lot of people asking and saying that maybe probably this metal is oversold. So are we going to see the price of gold continue being bullish, or maybe probably is it the time that the price is going to retract? So it is always good to consider those sentiment, because those are the psychological aspect: panic, fear, emotions. Those are psychological aspect that they really fall under the sentimental analysis. Because when you talk about sentimental analysis in the financial market, this is looking or gauging the market in terms of emotions, all right, the psychological traits of traders, and then now you use that, you factor in the fundamental analysis, you factor in the technical analysis, and you're able to get some really quite high probability setups. So if you look at this particular if you look at this 15 minutes time frame, what we are seeing here is the price creating some double bottoms here. We see these great good double bottoms here. So what it means is that we are looking at the price coming maybe probably all the way up to this particular point to complete this W pattern. So for this case, we have been able to see the price create or break above the neckline. This is the neckline here, right? That is the neckline. So we have been able to see the price do that, and we saw the price opening with some few gaps here, though very minimal. They have just been filled. The price has created broken the neckline here. So what are we looking for? So we are looking, in case the price retraces, probably now guided on that, in case the price retracing to these particular levels. And when you go to the 5 minutes time frame, you're able to see it's really a very nice order block here, of course. So we are looking at the price retracing to these levels, and at these levels we are able to look for some buying opportunity. So if you push it, you minimize the risk, maybe probably like that. So that's how we'll be having this other level, and now we'll be able to minimize that, drawing it from the 5 minutes OB, 5 minutes time frame OB between 4054.91 and 4059.35. So in case the price retraces to these levels of 4012.83 and 4,000 levels, that's where we have another OB. Therefore, this becomes a great opportunity to look at some buying opportunities, right? So in a nutshell, what I may say is that right now at the moment, it's always good to really be a bit cautious if you're taking positions on gold, because there are those sentiments. Some people are feeling that this thing is the yellow metal is so much oversold, overbought, I mean, and we might be looking at some selling opportunities. But it's not, to me, it's not yet ready to that particular point that we might be looking for selling opportunities. I'm still looking or aligning myself in terms of buying until I see quite a precise change of character, that the market has indeed reversed. Okay, so at the moment, I'll be looking at the dips definitely for buying opportunities, and that's how I'm going to align myself. Okay, so with that, ladies and gentlemen, I wish you a fruitful day. Let's see how these things unfold today, and I wish you a fruitful day, and always remember to stay focused and trade with purpose.